Malaysia's economy expanded by 4.4% year-on-year in the first quarter of 2025, slightly lower than the 5% growth recorded in the previous quarter. Now, the continued momentum is largely driven by resilient domestic demand, steady employment figures, and strength in the wholesome and retail sectors. Now, despite persistent global headwinds, Malaysia has maintained a degree of stability, with the central bank projecting full-year growth between 4.5% and 5.5%. In March 2025 alone, Malaysia's exports jumped 6.8% from a year earlier, showing strong performance in global trade. Particularly noteworthy was that 50.8% surge in exports to the United States, reaching a record $5.14 billion. And this reflects the country's tight integration into global supply chains and its reliance on international trade as a critical engine of growth. Malaysia is a highly open economy, with both imports and exports playing significant roles in its economic structure. It exports electronics, palm oil, petroleum products and machinery, while importing raw materials, capital goods and intermediate products needed for manufacturing and consumption. As such, its economic health is closely tied to the stability of the global trade systems and foreign demand. However, the landscape may soon shift. President Donald Trump's announcement of new global tariffs, including a 24% rate affecting Malaysian goods, introduces a fresh layer of risk, although implementation has been delayed until July. These measures could disrupt Malaysia's export competitiveness, particularly in electronics and other high-value goods destined for the US market. A Malaysian delegation is expected to visit Washington for discussions, but it certainly lingers. Should these tariffs take effect, Malaysia could face declining export volumes.